Hey, what's going on? This is Isaiah the Realtor, and I want to let you know this is outrageous. And when I say this is outrageous, I am talking about the interest rate. The interest rate is soaring and it's going up, and a lot of buyers don't know what to do. So I am going to jump in and tell you exactly what a 5% interest rate would do to your monthly payments and how that difference is affecting the market. So before I jump into it, I want to say thank you for watching. Thank you for subscribing. And if you get any information out of this that you think is useful, please like and subscribe to my YouTube page because I'll be dropping more gems like this as well. So let's jump into it. So interest rates are not that bad. They're not as bad as the 80s, because in the 80s, interest rates were about 18%. So buying a house then was a bit of a problem, and it was a big problem. But they were doing a lot of things to combat the interest rate, like prices became a little bit more feasible, meaning like the property value to interest rate actually leveled out. So it was a little bit easier to purchase a cheaper home, but you had to pay a higher payment. In Dauphin County, the average sale price is about $186,000, and in Cumberland County, the average sale price is about $264,000. So I'm gonna jump into the difference of the interest rates will do to your monthly payments if you were paying an average price for the area that you're in. If you are purchasing a property in Dauphin County, the difference between a 4% interest rate and a 5% interest rate, you're paying about a $57 difference in your monthly payment. So it's not that bad. So don't panic too much. So if you're still looking to buy and you're worried about the interest rate, just understand that it's not really hitting you significantly. But the higher you go in price range, it does take a bigger effect. So let's talk about in Cumberland County. So in Cumberland County, your monthly mortgage price increased about $126. So it went from you paying 4% to 5%. So your monthly payments definitely went up. So if you're thinking about if you should buy or if you should rent, you got to understand this too. That rent is going up 7% every month. Well, sorry, rent is going up 7% every year. So I don't know what next year will bring. I don't know if the interest rates will be higher next year. So in terms of buying now and buying then, it's best to buy now because you can control the interest rate that you're getting now. And if the interest rates drop within a year or later, you can also refinance after 6 months of owning a home. So if you're thinking about refinancing for a lower payment, you are able to do so, depending on how much equity you have in a home. So that could be a method that you might want to take if you're trying to, take advantage of the market. Because if you're in a position to buy now, you should buy now instead of waiting until later, because I don't know what the interest rates will be when it comes to a later time. So this was a quick little video of just jumping into the interest rates and talking about it because it's stuff that you need to know. And especially when it comes to buying a house, the interest rates will continue to rise, but don't be scared. It's always best to buy when you're able to buy rather than wait and trying to wait out the market, because nobody can tell the future, not even I can. And we don't know if the interest rates will go higher, but I promise you this, they're not going to be any 18% anytime soon. So this is Isaiah the Realtor, and thank you for watching. Please like, subscribe, and share. Thank you again.